Hi, I'm Pat Keown, a research analyst with Thomson Reuters Lipper, and I'm here to speak to you about fund flows activity for the week ended Wednesday, September 14th. Let's start by taking a quick look at that week's market activity. The S&P 500 index dropped 2.8% in what was a volatile week of trading. Volatility being caused by the market's uncertainty in which direction the Fed is going to take in regards to interest rates. One day, the market dropped 2.5% on news that one of the Fed officials issued hawkish statements about wanting to raise rates sooner rather than later. And the very next day, the market regained 1.5% of that due to a different Fed official having dovish comments about interest rates and wanting to hold off a little bit longer on making any rate changes. Well, let's turn our attention back now to the fund flows activity from last week. We'll start by taking a look at the fund macro groups. Equity mutual funds saw $5.4 billion leave last week. Taxable bond funds also had net outflows, somewhat smaller though, at $232 million. Muni bond funds, the only macro group to take in net new money last week, had a net inflow of $500 million. And lastly, money market funds saw $5.3 billion leave their coffers. Let's take a closer look at each group now. We'll start with the equity mutual fund group. The $5.4 billion in net outflows marked the 27th consecutive week of net outflows for the group. Continue along with another trend. We see domestic equity funds dominating the net outflows. Last week they contributed $4.4 billion to the total, while non-domestic equities had just $1 billion in net outflows. Let's move on to our equity ETF group now. Last week the group saw $9.1 billion leave. This was against trend, as so far for the year to date before this week, equity ETFs were up $45 billion, and they also had net inflows in 9 of the last 10 weeks. So this is somewhat against type for the time being. The largest outflow belonged to the SPDR S&P 500, which saw $3.4 billion leave. Another major outflow came from PowerShares QQQ, which had $1.7 billion leave. Let's move on to our next group now, taxable bond funds. We'll start by taking a look at the mutual fund part of it. Taxable bond mutual fund, net, as we stated before, had net outflows of $232 billion last week. Somewhat muted response. The group is up for the year and has been mostly up recently as well. And somewhat, the largest outflows belong to the high yield fund group, which saw $357 million leave, while on the inflow side, core plus bond funds took in just over $650 million in net new money. Moving on to taxable bond ETFs now. Another outflow here, $2.7 billion left for the week. It's the second straight weekly outflow for the group. Still, even with these last 2 weeks, the group is up over $60 billion for the year to date. Similar to the mutual fund taxable bond funds, we see that the largest outflows came from the high yield products, which they accounted for $2.1 billion of the $2.7 billion in net outflows last week. Looking at the individual ETFs, we see the iShares iBoxx High Yield Corp had about $1.1 billion leave. The iShares iBoxx Investment Grade had about $1 billion leave. And lastly, the SPDR Barclays High Yield product had about $800 million leave. Moving on now, we'll take a look at our Muni Bond Fund group. The group, still on their hot streak, extended their net inflow streak to 50 weeks in a row. They took in about $500 million in net new money last week. The biggest players last week were the high yield muni category, took in about $158 million. They've been there just about every week, it seems like, as one of the largest inflows. But somewhat new to the game is intermediate muni bond fund category. Took in $142 million, second highest among the groups. Moving on to our last group now, money market funds. As stated previously, money markets saw about $5.3 billion leave last week. This is split out. Institutional money markets had about $35 billion in net outflows, while institutional U.S. government money markets took in about $30 billion. We suspect this activity seems to be in response to the new money market regulations that are coming into play about mid-October, October 14th. So we suspect that that's why there's such big inflows and outflows in those two groups. Well, that wraps up this week's report. Please join us here again next week where another one of our analysts will be speaking about that week's fund flows activity. And if you'd like to take a closer look at the data yourself, please join us at our website, www.lipperusfundflows.com.